Hey champs, welcome back to Libertas Trading and welcome to the week ahead preview for the 17th of November 2025 and also the weekly roundup for the week commencing the 10th. So one of those weeks where, looking at the grand scheme of things on the calendar, it doesn't look like we've got much going on, but actually there are quite a few like sort of medium term impact events that can be quite market moving. So I feel like there's good scope for some trades this week. So even though it seems like it's quiet, we've got to stay on the ball. We've got to prepare properly and we've got to take it as seriously as ever. So that's always my motto anyway. So just looking at the week ahead. So to start off with, we have had the US government, which is now not in shutdown. So I'm just on the BLS website here, which is the agency that produce most of the US data we trade out of. So they were back to work Thursday. Based on this announcement on their homepage, it's looking like, we're going to get some stuff next week, but we're going to be using this website for information. So this is just bls.gov. No good listening to White House, no good listening to, the calendars have had it wrong for like 4 or 5 weeks. They just get their data straight from here, which hasn't been updated. So any news on data I will be doing previews for. If we get any CPI, if we get any NFP, if we get all the claims come at once, could be really nice. But also just keep checking this official website for any news. So could be really exciting if we get some news from the US next week, which will be good. Now, just head into the calendar. So this is UK time. So at 10 minutes to midnight on Sunday, we get Japanese GDP. Now, preliminary data. Not something markets ever focus on, but if we get a big enough deviation, we could see some really sizable moves. So not something I'll be doing a preview for because the chance of getting that deviation is quite slim, but just looking at the print from Feb to see how markets reacted. So this is dollar yen on the night of the 17th. And you can see here that GDP printed pretty strong. And yeah, it was a nice little move. So we printed at 2.8 above expected. The high was at 3.2, so we didn't even break the high, but still a massive beat there. And just look at the move in dollar yen, really nice. What I love about this move as well is, as I said, markets don't really focus on this, so they get caught off guard. Like you see with Japanese data, markets getting caught off guard. So let me show you an example now. So you can see here, this is when the data came out, and look how slow markets were to react. So even if you got filled after like 25 seconds at 152.25, you're risking 10 pips and you're making 30. So an amazing move. And you can imagine what happened here. Traders, Japanese GDP, nothing special. They got caught off guard. So they got caught napping and they all got in late. So this is a chance for us, these sorts of prints where we can get in nice and early. This is why we come prepared. This is why we have everything set up in time. And yeah, just get in, get a really nice fill. And if these prints don't move the market, you don't have to risk much. So, you can get out at break even. You can, risk small amounts to make quite large amounts. So this could be a really nice mover. I would trade the Japanese yen either way if we get big enough prints. So as I said, there won't be a preview for this one, but could be really nice. So keep your eyes peeled on this one Sunday night. Now, just heading back to the calendar. Monday morning's pretty quiet, and then we've got Canadian CPI. So as we spoke about for last Friday's employment print for Canada, not really much going on for the Bank of Canada at the moment. There's not much priced in for cuts or hikes, of course. So I can't expect that this will cause a major move based on the back of rate pricing. Of course, if we got some crazy numbers, it could cause markets to move. But just looking at last month's print to get a sort of a gauge of where this one could go. That we can see here, so this is only 3 weeks ago, but we can see here that we printed green across the board. Some of the important metrics of Bank of Canada came in quite hot, like the CPI median, but it wasn't the best print of all time, which meant we didn't get the best reaction of all time. However, on the short-term chart, so just looking at the 5-second chart, you can see that we got quite a slow reaction out of markets. We could have made some money on a scalp just holding for 3 minutes, which is for some reason how long Canadian data seems to last, about 3 minutes, and then it turns. So always scalping opportunities. So again, this wasn't really tradable, but we could have still made money, which is a promising sign. So there will be a preview up for this one, and this could be quite nice on Monday afternoon. So just heading back to the calendar, that's Monday finished with. Tuesday, not a lot going on. Sorry. But what we do have Tuesday, and we talk about markets getting caught sleeping, is we've got the ADP employment change. So because of the government shutdown, the ADP have decided to release a weekly ADP number, which last week came in really soft. And basically last week, it wasn't on any calendars. It wasn't spoke about in the media much. Markets were caught off guard. And if we have a look at how markets reacted to that print last week, just look at that beautiful move. So I'd only be looking for a really weak jobs number on this one, but you can see that they lost 11,000 jobs in that week apparently, and just look at them. Just look at the movement in markets. So really nice move. Again, markets caught off guard. This wasn't even on Bloomberg's calendar, so we'll be watching this next week. It's obviously on the calendars now after this move, but that would have been such a beautiful trade. So just quickly looking at the 5-second chart, this just sort of emphasizes, how offside markets were caught, how slow they were to react. You can imagine people going on Twitter and thinking, oh shit, there was a weekly ADP. I didn't know that. Oh, let's sell the dollar. So yeah, this was a really nice move downwards. And this is something we can look at trading Tuesday. So there won't be a preview for this one because I don't really think it's a major event. And of course, if we're getting loads of US labor data next week, this will have less importance, but we'll see how that goes. But if we do get a massive miss, it can be worth a nice little scalp. So something to keep your mind on. I would be sticking to dollar yen on this one. So that's basically it for Tuesday. Nothing else going on there. Just heading into Wednesday morning. We've got UK CPI. So yeah, UK CPI could be really good as well. Last month, we got a bit of a miss on CPI, but it basically came in line with the month prior. It wasn't that much of a miss, but the moves were huge. So could be some really nice price action off the back of this. Based on previous reactions and based on stagflationary concerns for the UK, I will only be trading a downside, but we will have a preview up for that one next week. Probably Tuesday afternoon, I'll get it out to you guys, so you've got time to watch it for the Wednesday morning release. So just heading over to last month's CPI reaction just to see how it moved. So here was the miss. Again, it wasn't anything special. We basically deviated from consensus by 0.2 on every single print or every single important print. But yeah, as you can see, it was, a fairly nice move. Just go into the 5-second chart to see how we reacted in the shorter term. We did see, you would have got a nice entry here, and then markets moved up nicely, and actually the, cable traded nicer there. So it was a fairly nice move considering the data wasn't that, the deviations weren't that special. So yeah, this could be really exciting on Wednesday if we get a, quite a large miss, and I'll be looking for some more medium term pound shorts on the back of that. So that's basically it for Wednesday. Nothing else going on. We've got some final CPI from Europe. Not important. I'm not worried about that. FOMC minutes. Won't be trading that one. Thursday's a waste of time, but we should be getting some claims data on Thursday, which could be important. A quick update on the US labour market. National CPI is not that important for Japan. We always look for the Tokyo one. And then we've got UK retail sales Friday, which I won't be touching with a barge pole. And then head into later on in Friday morning, we've got the EU PMIs. So I never tried the European one. I never trade the European ones. By the time we get these, we already know what's happening from the French and the Germans. I don't trade the French either. It's a lot of a smaller part of the European economy, so it doesn't move markets much. But the German PMIs can be really nice. So there will be a preview up for the German and the UK PMIs. I'll probably do one together, but this could be a really nice mover. So just head into last month, I actually traded this one and made some decent money from it. So we'll quickly check out last month's reaction. So the services, which is the larger part of the German economy, printed above the max. The manufacturing as well, printed just above consensus. So this wasn't even a perfect print, but we had a really nice move here. Just showing you my actual trade. This just goes to show, when I say wait 5-10 seconds for the release, why we need to wait. So I entered this one after about 2 seconds. After 4 seconds I entered. And this is where price was, and this is where I got filled. So it just shows you why it's so important on trading these events to wait for the spreads to calm down. I might do an educational video on this one day. But yeah, when I say wait 5-10 seconds, check the spreads, this is the reason why, because could have got filled here if I waited 5 seconds more, but I got filled up here. So gave myself an uphill battle from the start, but ended up taking profits around here. So really nice trade, good little one-to-one, risked a fair amount of money as well. So that was good, but it could have been a lot nicer. So yeah, this will be quite interesting on Friday. Then head into the UK PMIs Friday. So in September, we had a really nice print, which we'll talk about on Thursday when I make the preview. But the month after, so we had 2 trades off this in a row. In October, Again, this wasn't like an amazing print from the UK. We had services come in just above consensus, although in expansion territory. We had the manufacturing come in above the max and quite a lot above the max, but still in contractional territory. But the move was really nice. So the markets have been very sensitive to UK data, so this could be a really nice one as well. And then also on Friday, we have the US PMIs. Not something I'm too excited about trading, but I maybe will. I'll tell you what I'll do. I'll create a preview for the UK, for the German, and for the US PMIs all together. And yeah, if we get a big enough beat or miss, depending on the sentiment of the dollar on the day, it could be worth a trade. But we need something special out of these numbers. So that could be interesting. And then for the University of Michigan expectations, I won't be trading that one either. So that's it for the week ahead. Just looking at the weekly roundup, we had some really nice moves, so we'll quickly go into that. So I've already showed you the reaction from the weekly ADP. Just head into the UK jobs report from Tuesday morning. So this was absolutely perfect numbers from the UK labour market. Everything we wanted. Payrolls change came in super weak. We had big revisions to the downside. We had the private payrolls growth, which we spoke about its importance last week, came in at 4.2, which is what we were looking for. Earnings came in lower. These ONS numbers we didn't really show much care to, but they still came in lower. So a perfect print, and just look at this reaction in the pound. So disappointing. So I actually traded the cable and I felt lucky to get out at break even. I think I got out around about here somewhere, but I didn't get filled until about here. So yeah, just a really bad print, really bad reaction. Sorry, the print was good, but the reaction was so bad. This was a bit of an anomaly though. The US dollar just sold off at 7 in the morning with the pound. So this wasn't a true representation of how the pound traded. So quickly looking at euro pound, you can see we did have some nicer price action. I hope some of you guys, well, I know some of you guys made some money because you told me, but yeah, again, a bit of a disappointing reaction on the back of this one. So yeah, that's what it is. You know, markets don't always react how we want them to. We're not always going to get winners. We take a few break evens every now and then, but at least we showed up and lived to fight another day. So just head into the Aussie jobs report from Thursday morning. Loved waking up for that one. So just looking at the numbers we spoke about, we're looking for above 45k on the employment, which, you know, it basically came in. It came in at 42k, so not too far away. The unemployment rate came in at 4.3. We were looking for 4.2 or lower. So remember, if you remember rightly, we said that for a 4.3, we'd be looking for an even bigger full-time employment. So we're looking at 50k on the full-time, but that was only if we got 4.2. So with a 4.3, we would have wanted something like, you know, maybe 60, 70k. So I traded this one. Not the best numbers of all time and not part of the trade plan, but you know, on aggregate, that is a pretty sizable beat for the Australian economy and for the Australian jobs market. And, you know, I mean, the move was okay, made a little bit of money on it, but nothing special. Just looking at the 5-second chart, those who entered fast would have got rewarded with nice entries, hopefully. And yeah, I took profits up here somewhere. I think I took profits here when it started moving down a little bit lower. So made a little bit of money on this, nothing special, but again, you know, these numbers weren't ideal, so they were good, but they weren't, you know, they weren't 5-star trades. So Aussie New Zealand traded nicer. So Aussie New Zealand traded really nice, and that's the last few prints now. Aussie New Zealand's traded a little bit better than the Aussie dollar, so maybe next month I'll be sticking to the Aussie Kiwi, but that traded quite nice and you would have made some good money there. So that was Aussie jobs. Again, it seems like every month we get a good trade out of Aussie jobs. So this was probably one of the worst deviations that we've had. So yeah, that was all good stuff. And then for UK GDP, which was at 7 in the morning Thursday, we had some misses on the GDP, but you know, going by the trade plan, it wasn't the numbers we were looking for. We're looking for 0.3% deviations based on past reactions being disappointing to these sorts of numbers. And yeah, these sorts of numbers came out, and look at the reaction. So this is why we stick to the trade plan. Interestingly though, this would have been worth a scalp, you know, waiting for 5-10 seconds for a fill, but you could have made a bit of money, but really nothing special there. So that's why we stick to the plan. These numbers weren't impressive enough for a trade. So that's it, guys, for the week ahead and for the week previous. Any questions, feel free to give me a shout on Substack. Just hit me up. Any suggestions, hit me up. If you can like and restack, that supports our channel and helps us grow, which is good for your content. So Yeah, good to have you here. And yeah, again, any questions, give me a shout. Have a nice weekend and good luck for next week.